All equities are seeing a sell-off on Monday. The S&P 500 is down 2%. Gold's down more than 2%. Here to discuss the market sell-off is Phil Streible, Chief Market Strategist at Blue Line Futures. Phil, I appreciate you coming on such short notice. It's a tremendous day for the markets. Thanks for being here.
Yeah, thanks for having me on.
What's happening today, Phil?
So you have a couple different things that are going on here. I've been writing recently how gold has come down in this narrow range. And if you look at a lot of the foreign currencies, like the euro currency up at 119, the British pound up at 130. These other foreign markets, they want to reduce those prices. And what happens is the inverse correlation between foreign currencies and the US dollar. The dollar index is coming up. It actually broke out to the upside. That's going to weigh on commodities in general. So if you look at all the commodities, agricultural markets, you look at your energies, you look at your metals, they're all under a lot of pressure. So that's like one part of the equation is a dollar coming up. There's a second part here, which kind of is political. And I don't like to talk a lot about politics, but, with the Republicans indicating that they are going to go forward and try and nominate the Supreme Court justice, what that did was it really got the Democrats quite upset. And they're going to do whatever they can they said that they're going to retaliate, blah, blah, blah. But what they're actually doing is that there will be no fiscal stimulus deal whatsoever. Gold was relying and the metals were relying on this inflationary environment from increased fiscal stimulus. They're going to come out. They've been negotiating like 3 trillion versus 1 trillion, whatever the numbers are. It seems like all those deals they've just been eviscerated. They're off the table. So you don't have the stimulus. You got a rising dollar. You get the big move down. That causes the margin calls, U.S. equities, NASDAQ volatility so high. Again, more margin calls from that. So it's just a waterfall effect that's going on right now.
What you said sounds like just a sell-off and risk. But why is gold taking a hit too? Wouldn't that logically make sense that gold would be rising?
Oh, so, if it's going to be perceived as a safe haven. So we just got to wait a little bit. This is kind of the initial, the guys that might have been a little bit over leveraged. They're the ones who got whacked on it. If you've been working with me and like the clients have been working with me, we've been taking positions off as we go up. We take off our excess, speculative positions. We keep the core positions on because the long term, we will get the stimulus at some point. It might not be before the election or after it. And it should clear the way for gold price to go higher. But you're going to get this small bit of volatility in the market. And, if you look at that August 12th sell-off, that's where it made its low. We had that huge correction down in silver. And then we had a little bit of a follow through. So we do anticipate towards the end of the day, you'll probably get margin calls selling. And then in Asia, you'll probably get an additional sell-off that'll go. And we think the market will probably post some kind of support in the overnight session. So we're actually, we want to get slightly long on the market. And my commentary, I wrote, by 1910, by 1855, you have your sell stop in the 1700s. We're using those micro contracts. So we have a strategy mapped out.
So tell us about the gold crossroads report that you wrote recently. What's your thesis there?
Okay, so I said that, we're coming up in this situation with the economy where we know that growth is slowing down. We had that initial bounce in March off the lows where these stocks that, we're on a Zoom meeting right now. We would never do this on a Zoom meeting before. It's stocks like these, and Zoom is actually a stock that's up on the day with this huge sell-off. It's these types of stocks that have created some kind of growth out there in different pandemic-proof technology and consumer staples or consumer discretionary. And what that's done is, so it created some growth. Now that has leveled off. So growth is actually declining. And whether or not the dollar index is going to go up or back down determines whether we go into a deflationary environment, which is not good for commodities or gold or stocks, or we go into a stagflation, which is actually good, where you're creating inflation with that slower growth, and they'll try and re-stimulate that growth. So it's a good situation for commodities. So that's why gold futures coming into the Fed meeting had gone into this wedge pattern where we're like kind of at the pinnacle of the wedge pattern, going to break out to the upside or downside. I think it's a small sell-off that we're having. I mean, it looks big in its scale, but, depending on your position, it's probably a small scale off if you're managing your position properly.
What did you see in the last commitment of traders report? Was this telegraphed at all by sentiment?
Well, I mean, the thing about the commitment of traders report is we also look a little bit deeper, and we look at how CTAs are positioned and how other managed money's positioned. And really, they are not very involved in the metals markets right now. So they're probably going to look at this as an opportunity to get long for the long run. And that's why we think that this is a good opportunity right now. If it was way overbought, if it was like soybeans, which are, at the record long and the funds are all long on soybeans, look at soybean prices, they're falling pretty hard. Everyone's running for the door. They're not running for the door on metals. This is just a sell-off because of a couple of different things going on.
Okay, why would we see a deflationary event, though? Because a lot of analysts I've talked to have argued for the opposite. With the Federal Reserve expanding the balance sheet at unprecedented levels, one would expect the opposite to happen, right?
Yeah, so that's why you either go into a stagflation or a deflationary. Deflationary, all that means is that the dollar index is rising. Okay, so the price of everything's coming down. They can't create any inflation at all, and that's what they don't want. Look at a dollar index chart, and you'll see the dollar index. It's over the last 5 sessions, they've been higher lows, and it's continuing to grind up, and it's right there where it could break back up. The dollar index, the only reason why people's 401ks are up near all-time highs and the metals and everything else got this massive rally was because the dollar is sold off. People don't realize that it's a teeter-totter effect, and now that low end's starting to come up a little bit, and it's going to put some pressure on a bunch of different markets. You could be long gold, but you need to sell something to fight a deflationary event. So you sell like crude oil against it or something else, some other asset class that's been inflated and doesn't have the growth.
Okay, the dollar index, you're right, has been trading at up in the last couple of sessions. In the long-term trend, though, of the last 3 months, it's still down. So long-term trends, if you're looking at the next 3 months, where would you see it headed?
So again, we're at this situation where we don't know because this political storm came up. So they're not going to just all of a sudden. They were literally printing money and handing it out. People I know were receiving checks in the mail, cashing them, going to Home Depot, buying lumber and everything else. And now there's this stalemate politically. So they're not printing. We need to see additional asset purchases. Now, the good thing is that the Fed does want to purchase additional assets. They said that they weren't. Where they will step in at next, the last resort asset for them to purchase is U.S. equities. And if you look at like the Swiss National Bank, they frequently buy U.S. equities. I was going to look to see if they start buying, on their next reports, because they publicize that. Maybe we'll see the Fed come in, start buying individual stocks at lower valuations, which makes sense. They can't be buying these asset classes at the highs and blowing them all out.
All right, let's break this down, Phil. The markets have already been trading at all-time highs for a while. I'm talking about the equities markets. One would argue that they were due for a correction already. One would argue that this is just a technical correction. Would you agree or disagree with that viewpoint?
Okay, so you have to look at, a couple different things. You look at price, volume, and volatility. Those are the 3 elements here that determine what type of market we're in. You look at the NASDAQ, the price is at an all-time high, valuations have blown out completely, and volatility is up substantially. Apple volatility up over 50%. NASDAQ volatility up over 31%. It looks like it could go to 40, 45. So it's like looking at the VIX. When the VIX is gearing up and it's up at this massive amount, you need to be in the market for a short duration of time because a correction will happen. This is the correction. And we broke that latest level of support, like on the S&P and the NASDAQ, and we've taken another leg down. I think really realistically on any kind of bounce, people need to hedge part of their portfolio. And I think they do so by selling something like the Russell against it. And I think that, I'll probably end up writing an article for you guys that starts to look at S&P versus gold ratio, S&P Russell, S&P or NASDAQ in the gold market. Look at those ratios again. I think there's opportunities.
Phil, what's your sentiment right now? Fear or greed? What are you seeing more of?
Are you talking on equities or on metals?
Let's talk equities first.
Oh, on the equities, I think people are really, well, what you need to look at is how is the volume coming in. If volume goes up substantially on these declines, are they still buying on the positions? I don't think so now. I think now people are scared once it broke that next level. We got 1,000-point sell-off in the Dow Jones. We haven't seen that in a while, and it's surely not a healthy bull market.
Apple, Tesla, they've been selling off for weeks now. This is not something that's happening today. It's already been happening. Are we in another bear trend, Phil?
Yeah, I think so. I mean, especially I'm pretty bearish on Apple. Tesla does have this, meeting coming up where they're going to talk about the batteries and things like that. I think when Nikola being exposed as this potential fraud, at least those are the allegations, the CEO, stepping down, I think that it does open up you'll get people that'll come out of that and they'll go into Tesla. That's why I think people are holding on. And, Tesla has done very well. So I think that Tesla's a great play for the long run, but the problem is that we just had that stock split. So the value of the stock is truly like $2,500 or that caliber. So you still have to look at it like that, so I think it might be too big of a stock for people to own.
So wait a minute, when everything's selling off like today, where do you go for safety?
You got to look at a couple of things. You got to look at, first of all, you should have your long should be twice as long as your shorts. You should be positioned that way. I think that gold is a good place. I think you got to be short something like an oil against a long gold. And I think that, a short Russell, the broad-based market, if you look, it never went positive. It was always down like, the 4% on the year. If you look at S&P 500, only, 10 stocks were up 50%. The rest of them were barely up to slightly down on the year. So there's a lot of good shorts out on there. The hotels, all the same ones, the usual suspects, the cruise ships, the hotels, some of the banking sector looks terrible. And if you look at the HSBC news, you look at Deutsche Bank, those are all big sells right now.
So how do you feel about gold and silver then? Would you be buying at these pullbacks?
Yeah, I like gold. 1910, like I said, we established some positions. A lot of the guys working with me have established positions from months and months back, so they've got good values. We're looking at 1855 to 1847, another key level on the gold market. I would definitely add some exposure. Don't go all in. Gold's a currency. It should only make up, 10, 15% of your overall portfolio. It shouldn't be the whole thing. Silver is a little bit more hybrid. It should only be, 8%. These individual miners, each one of those should represent a maximum of 6% of your portfolio. A lot of this is about asset allocation, implementing a strategy, having good portfolio management. That's what we like to practice, and that's what we like to help people with. So, most of the guys that we work with, they're not taking any big loss. If you're a cowboy and you go all in because you're missing a breakout on gold at 2089, well, you're going to be in trouble. You don't buy on these breakouts. You buy on corrections. Buy it when it's on sale.
Phil, last question. Going into the elections, how are you allocating your assets? What are the risks you're looking for?
Yeah, that's going to be really interesting. I was thinking about like an election-proof portfolio and what I would do. And, a lot of times it's like, we saw last election, the Dow was down like 1,500 points in that overnight. Gold was up massively. And then by like 48 hours later, they had reversed. So I think that it really depends on, which candidate. We know that Trump wants to be, at first he would implement more stimulus, but then he would try and become extremely fiscally responsible. So I think things would tighten up and everything else, try and go for that full employment. I think that, Vice President Biden, a little bit more socialistic in his measures. I think that, gold would most likely would do well with him. I think silver would do excellent with Biden because of the fact he's got that green power initiative, solar, wind. He wants to go after all that stuff. It's like a zero emissions initiative is what he's going for. So, I think you might have to have some straddles on. You're buying a call, buying a put in a few different asset classes. But, I really think that we still got a lot more to go. I'd like to see how a debate would go down.
Perfect. We'll catch up with you soon and update your views again for the audience. Thanks very much, Phil, for coming on the show today on such short notice. I appreciate it.
Yeah, thanks a lot, man. Thanks for having me.
Thank you for watching Kitco News. Stay tuned for more updates.